Good morning and welcome to the 2023 Frostrow Investment Company Seminar. We'd like to extend our thanks to Frostrow, our UK distribution partners, for inviting us back to present again to this year's conference in person in London. My name is Khan Vu and I have the pleasure of welcoming this morning Andy Ho, Chief Investment Officer of VinaCapital and Lead Portfolio Manager of the VinaCapital Vietnam Opportunity Fund, as well as Mike Kokolari, VinaCapital's Chief Economist, to this webinar. It's May 2023 and we've recently published the VOF interim results, which some of you may have seen. It's for the period ended 31 December. You may have also heard from Mike, as well as Ismail, our head of research, recently on the first quarter update. That being said, it perhaps is useful to start this conversation with an update on the market and macro situation here in Vietnam before we launch into discussion, Andy, about the fund performance and outlook. Mike, can perhaps we spend the next 5-10 minutes to see what you think is happening with the Vietnamese economy this year? What are the long-term positives for the market and whether you're seeing any of these emerging risks that we're seeing in global and regional markets, whether they're being played out here in the domestic market? And I know that some of our audiences here may be very familiar with the Vietnam story, but then there are others that are just dipping their feet into it. So perhaps we could start off with, Mike, some of the long-term positives you see here.
Sure, thanks, Con. So the story about Vietnam is we're following in what has become to be known as the East Asian development model. And this is the development model in which a country essentially becomes prosperous by developing its manufacturing sector and manufacturing exports that are then sold to the developed world, to the US, the EU, et cetera. And this is the same way that Japan became rich, Taiwan, the East Asian tigers, and so Vietnam is following on that same path. And one difference between what Vietnam is doing and how these other East Asian countries prospered is that they've kind of accelerated the whole process by, with FDI investment. So the core of the Vietnam long-term story is that we have FDI coming into the country to finance the build-out of the country's manufacturing sector. Right now, manufacturing is, call it around a bit more than 20% of GDP. And when we look at all these other Asian tiger economies, at the peak, manufacturing was over 30% of GDP. So that's the track that we're on. FDI flows continue to be very strong in the country year after year. If you look at what's happening, and the primary driver of the FDI flows is that wages in Vietnam are, call it about half compared to China, and the quality of the workforce is basically comparable to the workforce in China. I mean, that's a qualitative, but when we hear things, surveys from Jetro, people like that, that's kind of the basic outline. And then what's been happening in the world, particularly over the last, call it 2 to 3 years, with the geopolitical developments has also helped to accelerate the FDI. So that's kind of the core story. And then what happens is that you find that people move from the farm to the factory. They get employment in the factory where their wage is much higher. And so we have this other thing happening in parallel, which is that the development of the emerging middle class. And the last thing I would mention is that we have very, very favorable long-term demographics. I would say that Vietnam and India are probably two of the only countries in the world where demographics are actually a plus to GDP growth every year versus most countries around the world where it's actually minus. So you have all those things going on, urbanization, people moving to the cities. This is kind of the long-term story that has not really changed over the last few years. In fact, it's accelerated and gotten better, I would say.
And Mike, on the point of GDP, I mean, again, we've just published the first quarter numbers. It perhaps came a little underwhelming. But what's your forecast for 2023 and how do we stimulate the growth story here?
Right. So while I was just a minute ago trumpeting the FDI story and manufacturing products that are made to sell in the US, for example, the US is Vietnam's biggest export market. This year, what's been happening, people I'm sure will know, is that there's been a pretty dramatic slowdown in the US economy, and particularly with consumption. Okay, in the US, January was a pretty good month, but other than that, we've had the end of last year and continuing into this year, except for the very beginning of this year, 2023, when the weather was kind of unseasonably good in the US. There's been a sharp drawdown in the demand for the products that are made in Vietnam. And that's why, as you can see on the slide here, the manufacturing sector is actually contracting slightly. And so because of that, what we do expect is that the GDP growth this year will be a little bit more than 5%. That comes off of a very good year last year when the GDP grew by 8%. And so the biggest thing that's happening is that a real slowdown in the demand for products that are made here in Vietnam and exported to the US and other developed countries. I would just mention, by the way, that against that, we've got a pretty strong rebound in foreign tourism, which will support growth, and also that the domestic consumption has remained fairly resilient. It's not high, it's not low, it's just kind of going steadily along. So that's kind of the ups and the downs for the economy this year.
So, Andy, you've heard Mike briefly mention about potentially some of the risks to this economic growth story. We discussed quite a lot. What are the things perhaps we would like to see in place? What are the policies in place? What are the fiscal policies, the monetary policies that should be in place to help perhaps stimulate growth for the 2023 into 2024?
Yeah, I think follow on Mike's discussion on the macroeconomics. We've had long debates as to what are some of the policies that can help the recovery, if you will, of the economy to grow at about 6 to 7%. Again, like Mike said, we're probably going to grow about a little over 5% this year. One of the challenges that Vietnam's facing at the moment, and like many other countries around the world, is a lack of liquidity in the commercial banking side. And as a result of that, we're seeing a higher level of interest rates, much higher than necessary in terms of borrowing for businesses. So they're just not motivated to borrow at this higher level of interest rate. So one of the things that we feel that needs to change is there needs to be more liquidity into the commercial banking sector in Vietnam, and that'll come through FDI disbursements, foreign remittance, general growth of the GDP, as well as infrastructure spending by the government. So those are the key things that need to change in terms of the monetary and fiscal policies in the next 12 to 24 months. In addition, there has to be a more concerted effort in terms of approving various projects, particularly in the real estate side, making it more efficient and quicker. A lot of real estate investors have invested in properties and land, and frankly, the capital is sort of stuck. If the process of approval doesn't move along as quickly, there's capital tied up in this land. It needs to be released. The wheel needs to move again, and buyers need to buy, and developers need to develop, and products need to be handed over to the buyers. So the process needs to get going again, and that's going to require a bit of change in terms of the approval process, the efficiency and the quickness of approving projects.
And I think, Andy, we've seen last year the real estate sector really take a tumble off the back of the corporate bond issuances, as well as some investigations into the real estate companies. That sort of sucked the wind out of the sail in the market in general, because real estate is one of the largest constituents of the market. But yet, coming into 2023, we're seeing some very positive changes, policy changes. The government seems to be aware of the things that you talk about, the need for faster approvals, the need for reform. Mike, is the real estate sector in Vietnam fundamentally healthy?
Yeah, that's a great point. So basically what the real estate sector in Vietnam is facing at the moment is really more of a financial issue than a financial and liquidity issue, as Andy used that word before, rather than what I would call like an economic issue. So long story short, there's an enormous demand for new housing units in Vietnam. Normally when we see in emerging markets, the way that it tends to play out is you have a boom and bust cycle. Like there's a massive ramp up in construction activity, there's too many apartments that get built, and then the market peaks and then rolls over, and you have a dramatic collapse on the other side. That is not at all what's happened in Vietnam right now. The issue is that the developers, for one reason or another, have been having difficulty in accessing financing, either because of the tight liquidity in the banking system that Andy mentioned, or because of regulations around their issuance of corporate bonds that need to be rolled over and refinanced. And as you kind of alluded to, and Andy alluded to earlier, we do see that some of those issues are gradually being addressed, but from an administrative point of view, and also the liquidity in the banking system should ease as Andy mentioned, more money comes into the country, FDI. Basically, long story short, what happens is the State Bank of Vietnam buys those US dollars and then pays for the dollars with freshly printed dong that helps to support the liquidity in the banking system. So a couple different things are coming together at the same time that we think should help to ease the situation probably by the Q1 of next year. But the key point is, as you alluded to, is that the current frozen situation in Vietnam's real estate market is absolutely not an issue of insufficient demand. In fact, the demand is much higher than the supply, which is kind of an interesting situation. So it's a very healthy, fundamentally healthy market.
Mike, just to wrap up, perhaps, what else? Is there infrastructure spending that needs to happen? Is there public spending that needs to happen to also stimulate growth for this year?
Yeah, so I believe that the way government policymakers are looking at the situation is they're observing that there is this slowdown in the demand for made in Vietnam products. And against that, as I mentioned earlier, the tourism is kind of helping to support growth. And I believe that what policymakers are thinking is that if we take this opportunity to ramp up the infrastructure spending, first of all, it will help to support growth right now, and it will lay a foundation that will help to continue FDI coming into the country going forward. Right now, infrastructure spending is growing at about, call it around a 20% year-on-year pace for the first part of the year. The government had guided earlier that they were aiming to have about a 50% increase in infrastructure spending. This, as Andy alluded to before, would also help to put some liquidity into the banking system. And the reason for that is that they have some money which is set aside that they're holding in their own coffers in the central bank. And so when they spend that money, it will both help to support the economy's long-term prospects, and it will also introduce some liquidity into the banking system. So we do expect the pace of infrastructure spending to accelerate as the year progresses.
Great. So Andy, let's turn to our portfolio. Those are familiar with the Vietnam market, real estate, financials, big constituents of the index. Likewise in our portfolio, real estate is a large component of our portfolio. We mentioned about what happened last year. Obviously that's translated into some of the performance that we've delivered during the past 12 months. What are your views on the sector itself? It still is an important component of our portfolio. And how have we invested into this sector relative to some of the risks that we're talking about?
Now, in order for us to make meaningful investments into this sector, which I think most foreign investors investing in Vietnam through funds will have some sort of exposure to real estate. And we do as well. And we make meaningful investments in real estate space. And that means we're deploying anywhere between $30 to $100 million into these real estate companies. Now, in order to deploy large and meaningful amount of investments into real estate companies, we have to have downside protection. A lot of the funds that invest in Vietnam are simply acquiring the shares or the equity of the business, the real estate business, and their NAV has reflected the decline in the share prices.
So they're just simply going onto the stock market, just buying stock.
Sure.
On them.
Yes.
Whereas we are structuring, looking at opportunities in a slightly different way.
Yeah, I wouldn't say we're structuring. We ask that our investment is done in a manner that we have downside protection. Okay, so we approach these investments with a private equity lens, and as a result, we have downside protections. Needless to say, in this environment where the interest rate's quite high globally, and as well as Vietnam, and real estate sector is being challenged at the moment. So needless to say, we are working through our downside protection at the moment. And the hope is that we recover our investment costs plus more. And that's the key component for our investment strategy. So we take large positions, but we ask to have downside protections on pretty much all of our investments through private equity lenses. And when we have a difficult time like we are having right now in the real estate side, we can and will pursue our downside protection in order to recover our investment costs and more.
Yeah, so I think it's an important distinction you mentioned there. What we're trying to recover on these investments is the investment cost plus more, right? We have an expected return on our investments. That being said, what's recently been reflected in the NAV, in the interim accounts, I guess is a prudent adjustment to the value of these investments, recognizing that the team, we are working very hard to make sure that we are recovering those investments from our for our investors.
Yeah, I think said differently, it should the valuation we have in our NAV as it relates to these real estate investments should reflect the fair value of what we think, what the independent valuation company, which is I think KPMG, what they view as our ability to recover the investment and return. Now, I believe the methodology they're using is various scenarios in terms of cash flow and applying a discount rate that reflects the risks in the environment. However, my job as the portfolio manager is to pursue our downside protection and recover our investment costs and more, and to achieve the return that we set out to when we set it out, when we had the expectation we had in mind when we made the investment. That's the target we're going after.
So let's turn ourselves to investments, right? I mean, it's been a busy 9 months of this financial year so far. Recently, in first quarter, the team closed an investment in one of the largest digital advertising infrastructure platforms here in Vietnam, Chichalon Media. Perhaps you could talk a bit about that new investment that we've made, whether they have these downside protections you're talking about, what are the private equity terms that we've been looking at?
Yeah, I think it's big pictures. We have a very strong pipeline. We're looking at banks. We have healthcare. We're looking at, and you just mentioned we just deployed money into a digital infrastructure company. So the opportunity in Vietnam is plentiful at the moment. We are being quite prudent and careful because the interest rate environment is forcing a lot of businesses to rethink their cost of funding, their cost of capital, their internal rate of return, their growth potential, etc. So, and this forces us to think about the ability for these businesses to grow in the next 3 to 5 years. But having said that, we're excited. We made an investment in a company called Chichalon. They are the largest, 75-80% market share in Vietnam in terms of having a digital infrastructure. They are effectively deploying these latest technology LED screens around the city in Hanoi and Ho Chi Minh City, in the office towers, office buildings and residential towers. And it allows multinationals like Prudential or Generali or Procter & Gamble, Unilever to advertise their goods and services via this channel. And I think some of you may have seen it in the UK or the US or in Hong Kong or Singapore. You walk into the elevator, these screens provide content, commercial content, as well as news to the audience in a very brief manner. And so this company is a dominant player in this space, and we hope to see it grow to a significant valuation, $1 billion, hopefully in the next 3 to 5 years. And you're right, our investment has all the bells and whistles of our private equity investments. We will sit on the board of directors, we have veto rights, and we have certain downside protections in order to ensure that the business performs in a manner set out by the sponsor.
And just to wrap up the conversation this morning, I mean, we've obviously looked at the risks, and now we're talking about some of these opportunities. The areas of focus you talk about, what sort of the 1 or 2 sectors, Andy, do you think that the fund will pay a lot more attention to or increase potentially our exposure in the next 12 months?
Yeah. No, I think you touched upon a couple of things that we probably should address. One is the risk. Obviously, Mike's addressed some of the macroeconomic risks. We, as investors, we have to face more of what we call micro risks related to the businesses that we invest in. And I have to admit, we worry a lot right now about cash management. in a rising interest rate environment. We need to make sure that businesses, whether we invested in them or not, or potentials, they have the ability to manage cash flow properly. And I think fundamentally, one of the biggest issues is some of these businesses going bankrupt is their inability to effectively manage cash flow. And so even growth businesses run into problems. And it's difficult to borrow right now in a higher interest rate environment. And so you better manage your cash flow properly. Competition is very strong, particularly in the consumer space. Vietnam does not have a history of protecting domestic businesses, and it's opened up to multinationals to invest in Vietnam, and a lot of these multinationals are in the consumer space, whether they're products and services, primarily in products. So the competition is quite intense. So it puts a lot of domestic businesses that focus on the consumer side at risk from competition. I think it's good for the Vietnamese individuals, for the consumer. They benefit from the pricing, the quality of goods that come out of this competition. The third risk that we have to keep an eye on is banking liquidity. Banking liquidity is related to interest rates, cash flow, and all that stuff. But if the banks have a lack of liquidity, like I mentioned earlier, it's difficult for the rest of the economy to operate properly. So those sort of the risks that we face today. And in terms of the sectors that we like, we have a fairly robust exposure to the banking and real estate space, as you probably know. So in the other areas that in looking at our portfolio, we like to pursue is more on the healthcare side. We do have a population that, although over 60% are young and less than 35, 40 years old, and are productive, and are getting wealthier, we do believe that healthcare is becoming more and more important to their lifestyle. They're going to pay more for services and medicine. And so we are putting a lot more emphasis. We do have two large hospital platforms today, and we'll continue to focus on healthcare. Education has always been in the core of the culture of Vietnam, as well as most Asian family. So we like to look at education, but primarily in the K-12 space. And the other area we're excited about is logistics, whether they're about moving goods around, ports, warehouses, etc. So as Vietnam becomes a bigger and bigger player in the export world, manufacturing and export, we see that logistics, whether they're warehouses, ports, or movements of goods, it's becoming very, very important. And there's a lot of opportunities to invest in this particular sector.
Well, thank you, Andy. And just in the interest of time, we're just going to wrap up. I just wanted to say thank you for the both of you this morning. Short and brief. The slides and presentations will be on the website that Frostrow will host. We want to extend our thanks to our board as well as our shareholders for their support over the past year. It's obviously been a challenging one, but certainly, as you heard this morning from Mike and Andy, the opportunities do remain here in Vietnam, and we are poised here to take advantage of many of those opportunities through the fund that we run. Thanks again.